You're listening to AI PRISM from Seoul Economic Daily.
It's Friday, May 29th. Here's what closed in Seoul on May 28th. The KOSPI ended at 8,185.29, down 43 points or 0.53%. But the headline number is misleading. Underneath the surface, this market is sharply divided. 217 stocks advanced on the KOSPI yesterday. 678 stocks declined. That's roughly 3 decliners for every advancer. Yet the index only fell 0.5%. The reason is simple. Samsung Electronics and SK Hynix are doing almost all the work. In the Codex 200 ETF, Korea's most widely held cap-weighted index fund, Samsung Electronics carries a weight of 32.99%. SK Hynix carries 28.62%. Together, those two semiconductor names represent over 61% of the index. As long as those two stocks hold, the index holds, even when 600 other companies are falling. The equal weight version of the same index tells a different story. The Codex 200 equal weight ETF, which assigns roughly the same weight to every constituent, has returned negative 4.07% over the past month. The cap-weighted version returned plus 29.66% over the same period. That's a gap of approximately 34 percentage points in a single month. KB Securities analyst Lee Yoon-taek put it plainly. Concentration at this level historically deepens toward the end of a rally, rather than unwinding. Single-stock leveraged ETFs on Samsung Electronics and SK Hynix were listed on the Korea Exchange on May 27th. On listing day, only 77 KOSPI stocks advanced, while 826 declined. On foreign exchange, the $1 rate has now closed above 1,501 per dollar for 8 consecutive trading sessions. Analysts at IM Securities attributed the persistent weakness to 3 factors: foreign net selling of Korean equities, Iran-related geopolitical uncertainty, and dividend repatriation demand from foreign shareholders. 2 other market stories to flag. First, Korea's financial regulator is examining a proposal to require currency-hedged versions of overseas ETFs to be listed alongside standard unhedged versions. The asset management industry is pushing back. The numbers explain why. Year-to-date, the unhedged Tiger USS and P500 ETF, Korea's second-largest ETF with assets of 18.44 trillion won, or roughly $12.3 billion, has returned 13.69%. The hedged equivalent returned 8.19%. The gap reflects won depreciation. Net inflows since January tell the same story. 3.6 trillion won into the unhedged product versus 27.8 billion won into the hedged version. Second, Korean financial institutions invested heavily in crypto exchanges this week. Samsung Securities, Samsung Card, and Samsung SDS jointly acquired a 4% stake in Dunamu, operator of Upbit, Korea's largest crypto exchange, for 612.8 billion won, or approximately $408 million. Hana Financial Group agreed to acquire a 6.55% stake for approximately 1 trillion won, roughly $667 million. Korea Investment and Securities will sign for a 40% stake in Koinon jointly with global exchange OKX on May 29th. Total disclosed investment this week, over 2 trillion won, approximately $1.3 billion. The backdrop: Korea's financial regulator is reconsidering the decade-old policy of keeping traditional finance and crypto operationally separate. What to watch? The KOSPI Advanced Decline Ratio. Persistent 3-to-1 or worse decliners to advancers signals the semiconductor concentration trade is running without broad market support. And watch the one at the 1,500 level. If it breaks higher, expect renewed pressure on rate-sensitive domestic sectors. That's today's AI PRISM Markets Daily. This episode was produced with AI assistance based on Seoul Economic Daily reporting and reviewed by a human editor. AI PRISM is a IFRS award-winning series. We'll be back tomorrow.
You've been listening to AI PRISM from Seoul Economic Daily.